This is the Asia Trade. I'm Shery in Seoul.
I'm Haidi, Stroud-Watts in Sydney, where the market has just opened. The top stories this hour. Asian stocks are set to follow Wall Street lower as traders gear up for US inflation data that may influence the Fed's thinking on a possible rate cut next week. US Steel shares tumble as Bloomberg reveals President Biden plans to formally block Nippon Steel's $14 billion takeover bid on national security grounds. And South Korea's opposition forces through a highly contested budget in a show of political clout ahead of another impeachment push against President Yoon.
And Haidi, we start you off with breaking news out of South Korea. We are getting the latest jobless figures right now, coming in at 2.7% growth for the month of November. This is below economists' expectations and also matching the level from the previous month. 123,000 jobs were added in the month of November from a year earlier. And this, of course, as South Korea continues to watch the economic impact from the political impasse here, as we're now hearing from local media that President Yoon might prefer to be impeached rather than resigning, Haidi.
And Shery, we do have some breaking news when it comes to the Federal Trade Commission at the moment. We are getting that announcement from President-elect Trump naming Andrew Ferguson to be the chair of the FTC, saying that he's appoint Ferguson, I should say, to be chair of the FTC. He's one of two Republicans that are already on this body. So this is a replacement for the outgoing Federal Trade Commission chair, Lina Khan. And we did hear earlier from President-elect Trump that he selected Gail Slater to head the antitrust enforcement at the Justice Department. So we continue to watch this as really there's a lot going on for the FTC, right, when it comes to a number of antitrust lawsuits within that tech space and contesting claims from Amazon saying the FTC can't bring about their suit without administrative action. So potentially quite a busy time for this body. We're also hearing, of course, that Meta facing antitrust claims when it comes to its social media photo video startup situation there as well. So we are now hearing that really the contours of some of the other leadership aspects of the Trump administration incoming are starting to take place. Andrew Ferguson to be the next chair of the Federal Trade Commission. In that announcement saying that he was most recently the Solicitor General of the Commonwealth of Virginia. He has been an antitrust litigator working across several DC law firms as well, Shery.
Yeah, we've been watching these appointments very closely to try to figure out how foreign powers will need to deal with President Trump and his new administration, right? I mean, here in South Korea, we continue to see this political impasse and this change in government being a big possibility at this point. I mentioned earlier that President Yoon might not want to actually resign, that he might prefer impeachment, according to local media Chosun. At the same time, the opposition is right now trying very hard to impeach him. The ruling party is trying to come up with a plan for an orderly exit after the president failed on that martial law imposition. While here at the same time, we have metal workers now staging a strike today in order to demand Yoon's removal. So a lot of uncertainty here in South Korea. And of course, just the changes in the White House will also be a new challenge in 2025.
And those changes in the White House, Shery, particularly with the implications for a trade war, for additional tariffs and trade tensions more globally, will be weighing sort of large when it comes to how Beijing policymakers make their next move, right? And we do have the kickoff when it comes to the annual economic powwow. This is the Central Economic Work Conference that gets underway on Wednesday. And for that, we're perhaps looking to get more details on the policy easing signalling that we've already had from the Politburo meeting. So this is going to set policies for 2025. We've already seen that hint to more stimulus amid potential trade wars with the US, but they will also quite critically discuss the setting of the growth goal for 2025, what areas of the economy will be prioritised, potentially shifting again that focus to boosting domestic demand, to consumer-focused policies in light of what is expected to be significant global headwinds. So we'll be watching to get any news out of that Central Economic Work Conference. It runs through to Thursday for more details on China's economic priorities and agenda next next year. In the meantime, let's take a look at how we're setting up. We're just a few minutes into the start of the staggered session here in Australia. We're looking at some sort of pretty tepid moves so far. There were very incremental moves in the US overnight as we're really awaiting that key US inflation number, those price data really potentially giving more clues to flesh out the picture for the Fed, the prospects of a cut or a hold on rates next week. And to that end, we're seeing a little bit of upside trading here in Australia as we just come online. But as you can see, really just flip-flopping there in the first minutes of trade. Chicago Nikkei futures looking pretty muted there as well. Dollar-yen now really just under that 152 level there. The dollar was really up for a third day ahead of that CPI number, and that decline in the yen was pretty notable as well. Really a softening in the rally of risk assets that we'll see to start off the week as well. The euro, I should also mention, falling to its weakest since 2022 when trading against sterling. And dollar China is, of course, one we're watching, as well as trading in the Aussie dollar, of course, as we potentially get news on policy out of China from that work conference. Switching out the board, we'll take a look at treasuries and oil. I'll start with oil because that has really been kind of steadying. Some of that China stimulus enthusiasm has really started to fade because import data has been pretty soft. Futures have more or less been range-bound with a lot of geopolitical risks and supply glut expectations still really at play there. Let's get some more from our global economics correspondent, Enda Karan, who joins us now. And, you know, looking at US CPI, what do you think is the potential for this to really move the needle on Fed expectations at this stage?
I think it's a test of the disinflation narrative tomorrow, Heidi. The headline figure on month for headline CPI is expected to come in at 0.3%. If it does, that would be the fastest increase since April. And then if you look at the on-year measures, keeping an eye on the core measure there, 3.3% is the expectation. That would be the third straight increase. And I think numbers like that, or numbers higher than that, would certainly test the narrative that the Fed has been pushing, which is that, you know, broadly speaking, they've been making good progress on inflation, because within the components, within the CPI basket, you've got to keep an eye out for how shelter costs come in tomorrow. Rental costs continue to remain quite high compared to where policymakers have thought they would be. But you also have other components like car, auto insurance, airline tickets, medical costs. All of those have also been kind of testing, or have been serial offenders when it comes to testing the disinflation narrative. So I think tomorrow's numbers are important. If they come in broadly as expected, maybe on the downside, it will certainly add to views that the Fed are on the way to cutting next week. If they don't, I think it will complicate the story. Even if not for next week, it will certainly complicate the picture, I think, heading into 2025.
How much could President-elect Donald Trump, once he gets to the White House, complicate the picture even more, especially when it comes to those disinflationary trends?
Well, this is the big debate, of course. President Trump has made a centerpiece of his platform the idea that one example is to deregulate the energy sector, drill baby drill, which would bring down energy costs, and his point is that it would broadly have an impact on the rest of inflation too. Economists, though, are waiting to see how, on the one hand, the tax cuts that are promised, both the extension of tax cuts and additional tax cuts are promised, how they play out, how they impact economic activity. And, of course, on the other hand, if he goes down the road of putting those big tariffs on goods coming into the country, a lot will depend on which goods are targeted, how much of a tariff will go on those goods, and then how much of that will be passed on to consumers by those importing the goods in the first place. So the inflation picture for next year is pretty complicated. That's why I say tomorrow's numbers and the Fed meeting next week will be closing the book on the 2024 story, but we're still waiting for a lot of the key detail to really get a handle on where next year will be headed.
Our global economics correspondent, Enda Karan there. Now, traders are mapping out their game plan ahead of that CPI print. Garfield Reynolds leads our Market Live coverage and joins us now. And Garf, I mean, we have seen some big market reactions around inflation data out of the U.S. What can we expect this week?
Well, Shery, the big question, as Enda was outlining there, is, do we get a big upside surprise? I think if there's a big upside surprise in inflation, and that's seen as throwing into question the rate cut that at the moment is pretty close to being priced in, then that could cause some extra angst, especially for bonds. Equities, I think, perhaps have their own worries at the moment, and the direct inflation and bond market hit for equities is likely to be less direct, might weigh a little bit more on the Nasdaq if we do get a serious tick up in yields. But in a lot of ways, I think investors are looking for this inflation print to behave itself and to allow a smooth 25 basis point cut for December without. The hope would be that there's nothing in the internals in particular that is arguing for the potential that the Fed might take some rate cuts out via the dot plots when it comes to 2025, because the outlook is potentially going to be more important than the actual decision, assuming that we do get a rate cut. If there's anything that makes investors think they might not get a rate cut, well, when we're this close to a Fed meeting and you've got an 80 to 90% chance priced into the OIS strip for a Fed cut, next week, that would cause a lot of disruption.
Chinese investors or investors in Chinese equities would also be looking for certainty, right? Is there a chance that we'll get that from the Central Economic Work Conference, or there's potential that we have to wait until next March before the policy kind of details are ironed out?
Yeah, well, the difficulty, Heidi, is that the Chinese leadership marches to a very different drum than investors do. They take their time. They want to dot all their I's, cross all their T's, or whatever the Chinese equivalent would be of that. And from their point of view, they're saying the right things. They want to be sure that when they do implement measures, those measures are properly implemented and in the proper time frame. So it's fairly unlikely, I would think, that you'll get the sort of detailed laying out of stimulus that the markets are very much looking for. And it could even be that the Chinese leadership is a little bit reluctant to give them that. I think they might be quite happy with the modest lift that we've had this week in equities, and at least we haven't had a serious reversal the way we did after that September initial strong announcement followed by the break. So onward and upward is what they're looking for. They've talked about wanting to create stability in the property and stock markets, but stability doesn't mean they want to see equities get carried away with things. They want, probably it would seem, equities to stop being a sore point when it comes to sentiment, but their ultimate aim is to turn the real economy around, and that is going to take time to do sustainably. So I think anybody who is expecting that this week is going to bring another big pop in Chinese equities is probably fooling themselves. The action so far has been more in the bond market, and that looks like the more immediate, enduring action. Though, with that, that kind of underscores what's going on here. Bonds have had a strong rally that looks appropriate in the short term, but it's getting dangerous from the long-term point of view, because if China is going to succeed in turning its economy around, then 10-year yields south of 1.9% don't look sustainable. And the smarter play might be to look for, in the next coming months, that bond yield to gradually rise and stocks to also gradually rise, as China moves slowly and hopefully surely towards creating a more sustained economic rebound.
Garfield Reynolds, who leads our Markets Live Asia coverage with us. We'll also be watching Nippon Steel when Tokyo opens next hour, after Bloomberg revealed that President Biden will formally block its $14 billion takeover bid for US Steel. The American company's shares tumbled on the news. Let's bring our White House reporter Josh Wingrove, who broke this story and joins us now with more. This has been an ongoing political hot potato, right? US Steel have said that this is kind of the lifeline that they need. If this is referred back by CFIUS, do we assume that there are national security concerns in that review?
It's an open question what CFIUS is going to do, but it is, of course, a national security review. Now, the administration has been talking about sort of the role that steel plays in national security, but the reporting here is that once this hits Biden's desk, that he plans on blocking it, as he has signaled so far. I should note that President-elect Trump goes further than Biden in his public statements. And President-elect Trump says, I'm absolutely going to kill this thing. Absolutely. Over and over, he says it. Biden has been more circumspect. He says, for instance, that U.S. steel should be domestically owned. Today, the White House said on the record that they believe it's vital that U.S. steel remain domestically owned, and also that the CFIUS process is ongoing, from which we can infer that the file is not yet sitting on Biden's desk. But that deadline is December 22nd or 23rd, our sources tell us. That is to say, myself and my colleague Joe Doe, who also is on this byline. So I want to give him his proper shout out as well. We are a good team. If it hits Biden's desk, he then has 15 days to make a decision on this. And the reporting is that the people familiar with this matter is that he has not changed his mind, that he intends on blocking this. He thinks that the sale of a steel company, one that I should note is based in Pennsylvania, his state of birth, to a foreign company, even one based in an allied country of Japan. He's had concerns about that from the beginning, and the reporting is that he will proceed with that.
Could that be weighing on his mind, Josh? Because that's really interesting. You said it. I mean, this is a Japanese company. Japan is a huge ally of the United States. And why do this at the end of his presidency? Why not just let it run into Trump's term?
Our reporting is that another extension is unlikely. So without an extension, or it's kind of a procedural maneuver called a pull and refile, or colloquially called that, without that, the clock is going to run out before Trump's inauguration. In other words, so unless there's an extension or a punt or a pull and refile or whatever you want to call it, this is Biden's decision to make. So that's where the reporting is right now. This is a complicated one, right? The United Steelworkers president has been staunchly against this. Biden describes himself as a pro-union president, and there have been attempts to sort of broker some sort of deal, signaling, for instance, the company did that Governor Josh Shapiro, a Pennsylvania Democrat, had been working behind the scenes to see if there was any way to facilitate talks between the union and and Nippon Steel, the acquiring company. It doesn't look like those have gone anywhere. The president of the union telling Reuters this week that he still has concerns about that. So this is a closely watched one. CFIUS, the panel that's reviewing it, is almost always or very commonly used for Chinese transactions, transactions with adversarial nations or nations that are more of a threat, or that the U.S. at least perceives to be more of a threat. Is very unusual for deals with countries like Japan, allied countries like Japan, to attract as much attention as this one has.
A White House reporter, Josh Wingrove, with his scoop there. We do have some breaking news when it comes to a few more details around that SpaceX valuation, seeming to get a little bit more confirmation around that value, set at about $350 billion, as we had previously reported in that insider share sale. The tender offer includes a $1.25 billion portion of stock at $185 a share there. We had previously reported that SpaceX has been weighing a tender offer to raise that valuation of the company to $350 billion. It was valued at $210 billion earlier this year, but we've seen, of course, huge gains, particularly in terms of the moves past the US election, and Elon Musk's, of course, increasing prominence next to President-elect Trump and his role in the incoming administration as well. But that is a big jump, highlighting just some of those post-election gains across not just SpaceX, but the Musk business empire. So that previously mulled valuation was $255 billion that we'd also reported, but now we're hearing perhaps a little bit more sort of certainty around that $350 billion valuation, with a $1.25 billion stock sale at $185 a share. Ahead on the Asia trade, China is set to begin its annual economic work meeting, giving investors their next clues on action, details on what they can do to kickstart the economy. We get a preview next. This is Bloomberg.
Chosun is reporting that South Korean President Yoon would prefer impeachment rather than stepping down. That comes after opposition leader Lee Jae-myung forced through a highly contested budget in a show of political clout as he tries to build momentum for a new impeachment bid. Bloomberg's Hee Kim joins us now with the latest. So we have seen a lot of political wrangling in Parliament, a lot of questioning and investigations going on. Just bring us up to date.
Sure. So there are a lot of speculations first about, what's going to do exactly the ruling party lawmakers are going to do this weekend if there's another vote for impeachment. So there is something like rumors in the country that some of those ruling party lawmakers will probably vote for impeaching President Yoon Suk-yeol on probably this Saturday in the Parliament.
I mean, we were only about 8 ruling lawmakers short in order for that impeachment bill to pass. I guess some more could be persuaded then.
Yeah, definitely. That's probably because there are a lot of public criticism against those ruling party lawmakers who are against the impeachment of President Yoon Suk-yeol. They are getting a lot of text messages from the public. Oh. Yeah, there's some local media reports saying like that. There are also a lot of criticism against their schools, parents, friends. So there is such a lot of, under the pressure of the from the public to support for impeaching President Yoon Suk-yeol.
Especially when you're getting more details of how President Yoon wanted to arrest some people.
Yeah, definitely. We had a questioning at Parliament yesterday, and there were a bunch of military officials who testified what exactly happened on the day of the martial law declaration. They basically said there were actually a list of 14 lawmakers, including even the Han Dong-un, the leader of the ruling party. He was also on the list, and the President Yoon Suk-yeol, actually he was really trying to put them in an underground bunker.
Underground bunker?
Yes. Yeah.
Oh my goodness. So this is just heating up right now, and we're seeing some company workers even going on strike in order to demand the president's removal.
Yes. We had news yesterday. There was a big umbrella union called the Korean Metal Workers Union. They're controlling a lot of really big industries in South Korea, such as auto, shipbuilding, and steel. And then one of those companies, Kia, is actually planning a 4-hour partial strike today. But although it's just a one-day strike, there's a possibility for this kind of strike to spread in other industries like steel or Hyundai Motors, a really big plant in Ulsan City. So the umbrella union leadership is now discussing whether they should continue this rally, but there's now monitoring the political situation.
We'll be watching all of those company names when trading starts in about less than an hour. Hee Kim, thank you so much for that update from Bloomberg News. And remember, we will have also a conversation with Korean metals workers today, so do tune in for that. This is Bloomberg.
The latest from the corporate front, and Bloomberg's been told that Apple is planning to bring satellite connections to its smartwatch next year, allowing users to send texts even when they're off the grid. Our sources also say that a long-awaited blood pressure monitoring feature may arrive as soon as next year. Apple hopes the new features will entice hikers and health-conscious consumers into upgrading their devices. General Motors' Cruise self-driving car unit is getting out of the robo-taxi business. The company says the decision is based on the time and resources needed to scale the business in an increasingly competitive market. Cruise and GM's technical teams will be combined into a single effort focused on autonomous and driver safety technology for future models. More to come here on the Asia Trade. This is Bloomberg.
Now that China's top leaders have promised more forceful economic stimulus next year, the work of fleshing out the details falls to the Central Economic Work Conference that runs over the next 2 days in Beijing. For more, let's bring in our Chief North Asia correspondent, Stephen Engel, in Hong Kong. So, Steve, what should we expect today?
Well, I guess you can expect a lot of anticipation by market participants because there was that big pop-up yesterday at the open for stocks in the U.S. as well as here in Asia. But you know what? That rally on the back of hopes for more stimulus kind of petered out. And that's been the problem since that first batch of stimulus that we got in September. Markets went up and then started coming back down. Look at the Golden Dragon Index overnight. Essentially, the day before, it was up more than 8%. Yesterday, it fell back by more than 4%. The big names falling. Yes, there's some profit taking going on. Yes, the S&P 500 was down. Yes, there's a lot of anticipation towards the inflation data out of the United States. But again, this kind of follows to trend that there's a pop upwards in Chinese stocks followed by a quick reversal because the sentiment just kind of says, well, where are the details? And we saw as well here in Asia, Hong Kong opened up higher. The CSI 300 in Shanghai opened higher significantly. All the three main Chinese indices opened up high, including the H-share index here in Hong Kong by more than 3% yesterday, only to see Hong Kong close in the red, as you can see on your screen. We're waiting for more details. Yes, the Politburo the day before promised a more proactive fiscal policy. That's encouraging. They talked about forcefully spurring consumption. That is critical at this time of a slowing Chinese economy and the threat, of course, of Trump tariffs come January 20th when he returns to office. They also talked about a moderately loose monetary policy, the first shift of such kind in nearly 14 years. All good sentiment. The tone was set by the Politburo. Now it's up for the China Central Economic Work Conference, which convenes today, runs through tomorrow, most likely, to be behind closed doors. We already had the instructions from the top leadership of the party, led by Xi Jinping and the Politburo. Now we have provincial leaders, we have state-owned enterprise leaders, other government cadres meeting in Beijing behind closed doors to put the details to what will be finalized at the National People's Congress come March. So we're going to have to wait, really, unless they really surprise the market and come out with a communique at the end of the conclave tomorrow, which is not likely but not out of the question. We have to wait till March. Likely, the Chinese leadership is going to put in place pro-growth policies. That's going to be the priority, consumption, given the external situation is so dire. But again, the markets react differently. As Garfield Reynolds earlier this hour talked about, the markets respond differently because the Chinese government is a little bit opaque in their messaging.
Chief North Asia correspondent Stephen Angle there. Well, Israel has increased its attacks on military sites in Syria, claiming it's neutralising strategic weapons. The international community, including the G7, is watching the situation very closely. Some countries are expressing concerns about those operations. Bloomberg's Michael Heath joins us for more. So it was interesting because when these operations, and even our previous guest yesterday said, look, it makes sense for Israel to be doing this. If you take a look at the G7, which at this point is sort of cautiously optimistic, or at least willing to give the opposition, a chance. Is there a big gap there in how they're approaching this?
Yeah, it's an interesting one, Haidi, because both groups are sort of talking their own interests. I mean, Israel's taking a very hardline foreign policy realist approach that better to be safe than sorry. So it's conducting what's been called the biggest air campaign in its history, in fact, in bombing missile sites, Scud missiles, chemical weapons factories, even in a nod to the espionage capabilities of the Assad regime, it's bombed the archives of where its spies were based. So it's doing what's in its interests. With the G7, you have to remember there was a huge refugee problem when the war broke out, when the civil war broke out. So there's about 3 million Syrian refugees in Turkey. I mean, it's the biggest refugee group. And you remember in Europe, there was a huge surge of people there. A lot were in Germany, a lot were in Austria. And some of those countries would like to repatriate, and Turkey in particular, they'd like to repatriate some of those people. And Turkey would like most of them to go back. So the idea is that if there's a stable Syrian government or something approximating that, it's going to be more encouraging for a lot of these people who are temporarily settled abroad to move back home, which makes everyone's economies a bit better. So Israel's looking after what it has to do. The G7 is hopefully going to be able to progress, its issues as well. So I think they both understand where the other one's coming from. But Israel's, it has to live in that region. It has these countries on its borders. It can't afford to take chances, I guess.
And the US response has very much been, we're watching this, we hope for a good transition, but we're not going to get involved. President-elect Trump, JD Vance saying this is not our fight, right? Syria is not our friend. I think those words were the ones that he used. Do they have a choice though? Because how concerning is the potential rise of Islamic State again?
Yeah, look, it's a really big issue because once governance falls apart anywhere, it just opens up for whoever's willing to step in or has the means to step in can take over very quickly. And that's how Islamic State arose in that area. In Iraq, when there was that power vacuum after the US overthrew Saddam Hussein. So it's a perfect time for them to expand. And it gets even more complicated because one of the groups that's been helping keep Islamic State in check, which the US has been supporting, is Kurdish fighters. And Turkey considers them to be terrorists, and they're part of the Kurdish resistance in Turkey. So Turkey wants those Kurdish fighters disarmed, but they're holding a lot of Islamic State prisoners. Now, you disarm those Kurdish fighters, those Islamic State prisoners are released, they go into this area, and suddenly you've got a big swathe of Syria under Islamic State's control. So President Trump, he wanted to get out of there last time in his first term, and he was talked out of doing that. The US has about 900 troops there, and my sense is that sanity will prevail because opening up a new front for Islamic State to re-emerge, particularly in a more unstable Syria, is nothing that anybody wants. It's just interesting with Israel, though, that the Assad regime was an extremely brutal regime, as we've seen some of the reports coming out, and yet for Israel it was actually quite good in the past 50 years because it just kept that border quiet. There was no problem. They didn't like each other. They're actually technically still at war, but there was no problem on that border, and now all of that's been thrown into uncertainty.
It's such a nuanced situation there. Bloomberg's Michael Heath with the latest. Let's take a look at some of the other global stories that we're following. And the suspect in the murder of the United Health Group CEO is fighting being sent to New York to face charges, potentially setting up a long legal process. Luigi Mangione faced a court hearing in Pennsylvania where he was arrested on gun and fake ID charges. His lawyer says the 26-year-old will contest any extradition request. The judge denied Mangione bail to face court again on December 23rd. Doctors in Brazil say President Lula da Silva is awake and conscious after emergency brain surgery. Lula will stay in intensive care for 48 hours as a precaution and should return to the capital early next week. The president's health issues come at a delicate political moment with a fiscal plan hanging in the balance. It's also sparked debate about the 79-year-old's fitness for office. President-elect Donald Trump says his administration would help expedite permits, including environmental approvals for those investing at least $1 billion in the US. Trump did not provide any details about the steps he would take to help investors secure the permits to fast-track projects. Any such effort is likely to face hurdles at state and local levels.
And Haidi, we're less than half an hour to the open in Japan, where domestic-oriented stocks are outpacing big-cap exporters as traders look to shield themselves from the looming Trump tariffs. Let's cross to Tokyo, and our stocks reporter Alice French is there. So, Alice, what sectors could win out here?
Morning, Shery. Yeah, so we're basically looking at any sectors that are dependent on domestic demand as opposed to external demand. So that's things like retailers, local finance, things like Oriental Land that runs theme parks here. And our data suggests that such domestic stocks have been outpacing exporters by around 5% since Trump won the election in November, which is quite significant. And this is as investors are worried about how uncertainties around the tariffs that he's planning could impact, corporate confidence, slow down trade cycles and things like that. So we're really seeing this shift from big cap exporters to more smaller cap Japan-focused firms.
What other sectors are we looking at in terms of those particularly at risk from tariff action?
So I suppose the obvious ones are things like car makers and machinery that depend a lot on exporters for their revenue. And of course, the other thing that's been in the spotlight in the last few weeks is chips, is semiconductor equipment makers. And we've already seen, even before Trump has actually taken the presidency, we've seen the impact of his threatened tariffs on Japan's chip-making stocks. We saw in late November Trump announcing that he was going to hike tariffs on China and Mexico and Canada. And that day we saw a lot of Japanese names, including Tokyo Electron, Kokusai Electric, falling. But after that, the Biden administration did announce that they would be implementing slightly lighter than expected curbs on China, which then actually led to those names rising again. That will likely be a short-lived boost, I would think, because obviously next year is all going to depend on what Trump does, and there's quite a lot of worries about him implementing harsher curbs on China. So tech and also automakers are going to be kind of the main risks, I think. And a lot of strategists are advising being underweight on those sectors and shifting more, like I mentioned, to domestic names like retailers.
Alice, but we sort of already have a roadmap of what Trump 1.0 looked like, right? How can we expect markets to perform in Japan from what we saw back then?
Yeah, so under the first Trump administration, Japan's market as a whole actually didn't do that badly. We saw the topics rise about 20% in the 4 years that he was in power, which is less well than it's doing under Biden. Topics is up around 45% under Biden at the moment. But if we look more closely at specifically when Trump implemented his tariffs, so we saw him really ramping up tariffs on China and elsewhere throughout 2018, we can see domestic shares rising about 7% across that period, compared to a fall of about 10% for China-exposed stocks specifically, and also US-exposed stocks performing less well. This is on research from Morgan Stanley. So I think it's fair to assume that domestic stocks are going to be pretty resilient under tariffs this time too, because they do have that track record of kind of defying those sort of protectionist policies.
I think Glenn for it.
Our stock reporter Alice French there, joining us from Tokyo with a look at the Japanese market. Now, the potential ouster here in South Korea of the president, Yoon is likely to supercharge an investor revolt against the country's richest families known as chaebols, which have long dominated the economy. Bloomberg stocks reporter Yu-Kyung Lee joins us now with more on today's Big Take. Yu-Kyung, of course, we know that the Korean economic miracle sort of rested on the shoulders of these conglomerate chaebols, right? How can this political impasse, standoff, and just turbulent times affect them?
Sure. So I think the latest, the martial law decree could be supercharging some of the reform agenda that the South Korean government has, and some of the legal changes that the opposition party has been seeking. Immediately after the martial law decree was imposed and rescinded, there were a lot of concerns about what the current government would do with some of the flagship financial market policies they had, such as fixing the Korea discount, and also the corporate value up program that was meant to enhance shareholder value. But investors are now thinking that those initiatives would likely to get more momentum after this, because number one, the opposition could be emerging stronger, and the opposition party has been pushing for a more stronger reform agenda, and also because we spoke to regulators that they think that the programs such as the corporate value up could outlast the political turbulence because they have bipartisan support and big support from retail investors.
And we spoke to the Financial Supervisory Services head, right? And he was really telling us, you know what, everybody wants this to actually happen. But the chaebols are so powerful. How are they viewed in society right now, and what's the extent of their influence?
Sure. So they have been the engine of growth for the South Korean economy, and they are the key reason that South Korea has Asia's fourth largest economy. But I think right now shareholders are also thinking that chaebol is increasingly a new liability. There has been some of the key high-profile company that were trying to pull off these mergers deals. One of the oldest chaebol called Chosun, and this is where one of the corners in the financial market where we see the alleged mistreatment of shareholders by the chaebol, and those moves by Chosun, such move by Chosun, has been facing a lot of opposition from retail investors and also from regulators, and in the end, they canceled their M&A plans to merge two of their companies, and this is something that we have not seen from chaebol before. So even though in the past their power has gone unchallenged, now we're increasingly seeing from retail investors and also from regulators joining forces to make sure that chaebol does treatment that are also equal to all shareholders and not just are on terms that favor controlling founding families.
Yoon Lee, thank you so much for that. And I know that you've been preparing this big take for a long time, so great to have the story really out. Do go check it out. It's a big take on the Bloomberg terminal. Ahead on the Asia trade, new Bloomberg research also finding that the price of lithium-ion battery packs has fallen the most in 7 years. We discussed the impact of the EV adoption next. This is Bloomberg.
We're watching these stories when it comes to progress on energy storage, and Stellantis and its partner CATL plan to invest as much as $4.3 billion in a battery plant in Spain, giving a boost to Europe's struggling effort to build an electric vehicle supply chain. The factory in Zaragoza will start producing lithium iron phosphate batteries by the end of 2026. And it comes as Europe's bid to build its battery industry and break China's dominance in EVs seems to be running out of juice. 11 out of 16 planned European-led factories are either facing delays or cancellation, and at the same time, 10 out of 13 projects planned for Europe by Asian firms, including CATL, Samsung, SDI, remain on track.
And Haidi, new research from Bloomberg NEF shows lithium-ion battery prices dropping in the past 12 months by the most since 2017. BNEF's head of energy storage research, Yayoi Sekine, joins us now from New York. Yayoi, so why have battery prices fallen so much this year?
Yeah, so it's been quite an interesting year. I don't think there's any year where it's not interesting in the battery world. But I'll say that I guess in particular 2024, we've seen a significant a confluence of two major factors. The first is the fact that we've seen significant decline in metal prices. Lithium carbonate, for example, fell about 24%. That's a major input into lithium-ion batteries. So that's factor number one. The second and perhaps more interesting story around 2024 in particular is the fact that we've seen a lot of margins being squeezed because there's intense competition in the battery market, in particular in China. And it's really aggravated by the fact that there's a lot of capacity that has come online in the markets for both the Chinese market, which has been growing significantly, but also for the overseas market. And so if you even look at China alone, production within China was about 92% of the total required batteries that are actually needed for the whole world. So it gives you a sense of proportion of how important China is to this narrative and to this overall story. And then I'd say just another factor, and that's perhaps been the more challenging factor, is the fact that EV demand has been actually slower in some markets than a lot of the players had expected. And that really pressured a lot of the battery players to look for ways in which they can run their factories in order to be able to supply to the market and have enough volume.
Yeah, I was just going to ask, how important is the risk of tariffs then when it comes to China and the broader battery market?
I mean, it's less about the risk. It's quite clear that tariffs are already, it's already said in the case of the US that tariffs will go up in 2026 for non-EV lithium-ion batteries. They have already gone up for EV batteries to 25%, up from 7.5% before. So I think it's a matter of how much it's going to actually affect the prices for lithium-ion batteries in the U.S. I say here in the U.S., so I think a lot of the players in the market here are generally accepting that the tariffs will go up. I think the question is, will they go up even further once the new administration comes into office? And that's very possible. So I think the risk factors are about assessing, is it best to to essentially plan in the scenario that these tariffs go up and potentially be importing more batteries in 2025 ahead of, say, tariff hikes in 2026. So we're watching to see how that will impact battery prices over the next couple of years.
BNEF's head of energy storage research, Yoon there in New York. We do have some factory gate data just coming from Japan at the moment. When it comes to November, producer prices rising 3.7%, beating expectations of 3.4%. We're also seeing that a little bit hotter on a month-on-month basis there as well, 0.3% on month. The estimate was for 0.2%. When it comes to that industry confidence gauges as well, we're seeing large manufacturers, all industry, both seeing a gain of 6.3 points and 5.7 there as well. Pretty interesting when it comes to expectations, given that we continue to see that acceleration of PPI on a month-on-month basis and on a yearly basis there as well. And that really does feed into what we're expecting from the BOJ next week as we get that Friday decision. But certainly the move that we've seen in Japanese bonds, JGB futures, really getting a shot of fresh momentum there as that sort of expectation of the BOJ shifts with what has been kind of pretty consistently hotter than expected PPI numbers, which could set up the risk of an overshoot on consumer inflation as well. More ahead on the Asia trade. This is Bloomberg. Well, these are the stocks we'll be watching very keenly when trade opens in Korea and Japan shortly. And Nippon Steel is going to be, the top stock that we're watching going into that open, Shery, right? Particularly as we do have really these expectations of that drop. We saw the drop when it comes to US Steel. President Biden planning to block that sale to Nippon Steel. We know that the CFIUS panel has to refer that decision or return that decision to Biden by December 22nd or the 23rd, according to our scoop. Our reporting there. The fact that it would get referred would suggest that there are obviously national security concerns. So we know that the president has been long opposed to this. So it will be very interesting to see how this plays out for Nippon Steel. But also, Shery, the bigger question as to what happens to US Steel, right, given this has been such a prospect of a lifeline.
We'll be watching also manufacturers across South Korea, including automakers, because we are now expecting Korean metal workers to stage a strike today, pressuring President Yoon to resign. We will be speaking directly to the Korean Metal Workers Union that has 190,000 members. Workers at all 3 Kia plants in the country will strike for 4 hours. The market opens in Seoul and Tokyo are next. This is Bloomberg. This is the Asia trade. We're counting down to Asia's major market opens ahead of U.S. inflation data that we'll be monitoring closely. But Haidi, in the Korean session, we'll be watching those manufacturers, given that some workers and unions have gone on strike from today for a few hours. All of Kia plants in South Korea will be closed. We'll be watching that market reaction.
Just adding to the broad political uncertainty that the country continues to grapple with heading into this weekend, right? And Shery, uncertainty when it comes to China as well, although investors will be hoping for kind of upside risk if we could potentially get some more details on the stimulus plans, on that focus on domestic consumption. We could see that kind of further fuel this rally, which we know from previous experience in China could run out very quickly.
It's been interesting to see the global market reaction because we had local assets in China gaining ground on that news, but global markets not really reacting that much. The Nikkei coming online, not doing much at the moment, as we're seeing the Japanese yen holding at that 151 level against the US dollar as well. We'll be watching the BOJ because it's sort of taking the unusual step of having a board member give a speech in January. Of course, we'll be watching that BOJ rate decision next week very closely and more hints of what's to come in 2020. 2025. Take a look at how South Korea is coming online as we keep a very close eye on some names, including Kia, not to mention Hyundai as well, POSCO as well, just because we had some metal workers now staging a strike today for a few hours, which will disrupt some production. And of course, all of this as we continue to see that political standoff here between the opposition, President Yoon, and also the ruling party. The latest that we heard from local media is that President Yoon preferred to be impeached rather than resigning. How that will work itself out is a key question right now, as we also got jobs data earlier today that showed the unemployment rate for the month of November coming in at 2.7%. A little bit of downside for the Kospi, but this, of course, after some stabilization when it comes to those markets, including the Korean won. The first 10 days of trade, the deficit coming in at $1.5 billion, and the average exports rising 5% year on year, Haidi.
Yeah, and of course we continue to watch those trade numbers very carefully, given we know that next year with potential tariffs things could look quite different. But take a look at how we're trading in Australia, Shery. This midweek session, we're just about an hour until the start of cash trading here in Sydney. We are seeing a little bit of downside, 0.3%, that sort of tepidness as we get, as one sort of investor said, animal spirits are sort of off the table for now until we get confirmation either way from the US inflation print and whether that sets a narrative for the Fed. And we're seeing that very much play out at the moment. A little bit of softness there when it comes to trading in the Aussie dollar there as well. We're seeing bonds edging a little bit lower here in Australia ahead of a speech expected from the Deputy RBA Governor Andrew Ferguson. They're following that dovish hold that we had from the RBA on Tuesday. We are also seeing, when it comes to US Treasuries, slipping ahead of that inflation data. Traders preparing for some long-dated bond auctions later this week as well, Shery.
Haidi, our next guest is cautious on hardware tech stocks and sees few clear winners in Asia. Joining us now from Tokyo is Aisa Ogoshi, Asia Equities Portfolio Manager at JPMorgan Asset Management. Aisa, always great to have you with us. Of course, here in South Korea, we're very much focusing on SK Hynix, Samsung as well because of those advanced chips. But how are you expecting the AI theme to play out in 2025?
Yes, so hardware tech in Asia has been a great performer this year. We believe the earnings are, fundamental earnings are solid and that will continue. Although when you look at the US markets, the theme has mainly shifted to software beneficiaries. And there, it's quite difficult to currently find some software AI beneficiaries in Asia. Therefore, we think the hardware theme might have a pause while the market digests some of the looks for software winners in that AI area.
Market's also digesting what we heard from the China Politburo when it comes to supporting the economy. We want more details from the World Economic Conference, but how are you expecting regional markets to react to that? It was interesting that the global reaction really was pretty muted overnight.
Yes, I think the market reaction is reasonable. We do expect more detailed plans, maybe towards the end of the year or towards first quarter 2025 from the Chinese government. We understand if they would like to save some bullets for when the new U.S. administration takes place and there's more clarity on the tariff front. But the direction is definitely positive, and we therefore are still constructive on Chinese equities at the moment.
What would you be focusing on within that constructive stance?
So fundamental, macro is still very tough, obviously. But like in Japan or in Korea, we are seeing Chinese companies shifting towards more shareholder-friendly stance, redistributing in terms of higher dividend payouts or buybacks. And this is a change that we haven't seen for a long time in China. So China has traditionally been a very dilutive market where equity issuance dominated, and that is starting to change. And this is an area where we focus on when we pick stocks in China.
When you take a look at some of the sort of Asian market darlings this year, the likes of India, the likes of Japan, do you expect these themes to play out in a similar way and an extension of those rallies into next year?
Yes, so India is currently going through a soft patch in terms of economic cycle, but we also think there is some elements of structural headwinds. For example, the household leverage ratio has risen, so net savings for households, it's down, very low. It's probably one of the lowest since 1975. That's obviously affecting consumption. So what we really need to see in India is more quality salaried jobs being created, and that would require more private capex starting to happen in India. So we await some of good news or positive signs of that. Whereas Japan, we feel that the sustaining wage increase, that's also good news. Japan is also, we are subject to tariffs, obviously, but less so than the other exporters. So here we are still positive on the outlook. And of course, the corporate governance improvement and shareholder return story still has legs to go in Japan.
Aisa, we're watching some Korean stocks right now, including Kia, actually gaining about 0.3% early in the session. Of course, we were talking about metals workers in the factories across South Korea for this auto manufacturer going on strike for a few hours today, demanding President Yoon's resignation. Do you expect the political impasse to have a lasting impact on Korean markets?
Well, I think what markets really don't like is uncertainty. So the quicker the political issues are resolved would be positive. We also feel that the underlying trend of pressure on the Value Up program, for example, will continue. And of course, Korea has always been a cyclical export-driven market. So any improvement, for example, in China would be a positive for Korea. So I would say, obviously, the political issues are, it's an uncertainty that we would like to see getting resolved quicker rather than, later.
Yeah, we had some miscommunication here in the control room, but Aisa, we will leave it here. Aisa Ogoshi, Asia Equities Portfolio Manager at JPMorgan Asset Management. Really great to have you with us. Thank you. Coming up on the Asia trade, more Korean unions join public protests pressuring President Yoon Suk-yeol to resign. We speak live with the striking metal workers union later this hour. This is Bloomberg. Chosun is reporting that South Korean President Yoon Suk-yeol would prefer impeachment rather than stepping down. That comes after opposition leader Lee Jae-myung forced through a highly contested budget in a show of political clout as he tries to build momentum for a new impeachment bid. Bloomberg's Hee-jin Kim joins us now with the latest. And of course, Hee-jin, we're watching also the shares of the likes of Kia and other manufacturers because Kia is supposed to be affected when it comes to their workers striking today.
Yes, right. So their unions are staging a one-day strike today, although it's just a 4-hour strike, but it's happening all of Kia's 3 plants in the country. So they have really big manufacturing plant for their automobiles in South Korea. So although it's just a one-day strike, everyone is watching it because Kia is such a big name. Their suppliers will also follow the suit, and the unions also they're gonna discuss again next week if Yoon is not impeached this weekend.
Yeah, because what happens next, right? I mean, this could be just the metals workers, but if this spreads and President Yoon is still in power, which they don't want, how it could affect the broader economy, right? Because the political standoff right now, bring us up to speed, because I'm not quite sure where we're at. Are we going into an impeachment vote? Are we going into an orderly exit of President Yoon? And President Yoon saying he prefers to be impeached at this point? That's kind of confusing.
Yeah, right. So local media, Korean newspapers saying that Yoon actually has no intention to step down by himself. And so probably the likely scenario is that the opposition party, like they said, they're going to have another vote this Saturday. That's what they say. They're going to basically say they're going to hold that impeachment vote every Saturday until Yoon steps down. So there are a lot of speculation going on in the country. So one of the speculations is that some ruling party lawmakers probably changed their mind because there are a lot of public pressure on them to vote for the impeachment. They're getting a lot of, a bunch of text messages from their friends, families, or, all the school old friends to support for impeaching Yoon. So, yeah.
I mean, given, of course, the ongoing protests and also the ongoing investigations, we're learning more about what happened when President Yoon decided to declare martial law, right? Tell us about some of the events surrounding that whole fiasco.
Yeah, sure. So that's probably why the public pressure is increasing, because yesterday we had a hearing against the military officials by the lawmakers, and they actually said that what exactly happened on the day of the martial law. One of the things is there was actually the list of the 14 lawmakers who the President Yoon Suk-yeol was trying to arrest. Actually, Yoon was really trying to put them in an underground bunker, which was specially designed in case of the war with North Korea.
Yeah, I can imagine the pressure given, of course, that's such an affront to democracy. 40 years of democracy here in South Korea. Kim Hee-jin, Bloomberg News in Seoul. Haidi.
Extraordinary developments that we continue to watch, and we're also watching Beijing very keenly. Shery, China's top leaders have promised more forceful economic stimulus next year, of course. Now the work of fleshing out the details falls to the Central Economic Work Conference. That runs over the next 2 days in Beijing. Kicks off today. Let's bring our Chief North Asia correspondent Stephen Angle in Hong Kong. So could we get the details now? All right, we seem to have some issues getting through to Steve, but we will try and get back with our Chief North Asia correspondent for the latest on the Central Economic Work Conference. And of course, investors will be hoping to get some of those details when it comes to the further stimulus push, when it comes to exactly how they're going to prioritise domestic consumption and lifting domestic demand, and what sort of barriers and protections will be put in place ahead of expected trade pressures from the incoming Trump administration. We'll be getting a lot more analysis on that too in terms of who we'll be speaking to throughout the course of the day here on Bloomberg TV. This event, of course, runs for 2 days, and we'll be keeping abreast of all the breaking developments. More ahead on the Asia trade. This is Bloomberg.
The potential ouster of South Korean President Yoon Suk-yeol is likely to supercharge an investor revolt against the country's richest families known as chaebols, which have long dominated the economy. Bloomberg Stocks reporter Yoo Kyung-lee joins us now with more on today's Big Take. Yoo Kyung, I mean, you've been writing this story for months now, and the fact remains that these chaebols have been the backbone of the economic miracle here in South Korea, right? And now this political turmoil is happening. The standoff continues. How are they going to be affected?
Yeah, sure. So initially immediately in the aftermath of the martial law last week, there were concerns that some of the key initiatives that South Korea's government has been pushing for, such as the corporate value up and trying to resolve the Korea discount, could be losing momentum. But now what investors are saying that such initiative could actually gather more speed because, number one, opposition could be emerging stronger after this political turmoil, and opposition party has even a stronger reform agenda than the current ruling party. They're pushing for a sweeping legal change that could improve corporate governance for South Korean chaebol. And also, we spoke to some of the regulators in South Korea who said there's going to be bipartisan support for the initiative like corporate value up. So regardless of who's in charge of the government, they have more urgency now to push through with some of the reform agenda to make sure that the Korea discount could be resolved.
Yeah, we actually spoke to the main opposition leader, Lee Jae-myung, right? And he was adamant that when it comes to reforming South Korean capital markets, they were actually on the same page. But at the same time, these chaebols are very powerful. So how influential are they when it comes to really deciding on policy and the direction of the economy and markets?
Yeah, so they're still very powerful. I mean, they are the reason that South Korea is Asia's fourth largest economy, and they have been the engine of growth for the past half a century. But now a lot of shareholders are also seeing them as a liability, and the reason that the South Korean stock market is unable to unleash rally that we have seen in markets peers such as Taiwan. So this is one of the corners where we can see their powers have went unchallenged is M&A. But this year, for the first time, in cases like Chosun, which is one of the oldest chaebol in South Korea, we are seeing some of their M&A plans getting canceled because there has been opposition by not only investor but also regulator who have been stepping in to ensure that the M&A plans are conducted in equal terms for all shareholders and not just favoring the few controlling shareholders related to founding families.
Which is why we've been seeing this so-called Korea discount, right? Are we expecting that to lessen in 2025?
So that's a really good question. But we've seen Korea discount for past decades, and it's not going to go away in a year or just overnight. It's going to take time. But a lot of investors I spoke to were really hopeful that we're at the start of a sea change that could really see that some of the issues that have been weighing on the South Korean markets going away. And one of the key, the first step could be if the parliament indeed passes the key legal change in the commercial law. A lot of investors see that could be the first step that could lead to resolving Korea discount. So we'll see about that in 2025.
Bloomberg's Yu Young-lee, thank you so much for that. And do check out the big take for today out of South Korea. Our stocks reporter Yu Young-lee here, Haidi.
And Shery, we are continuing to watch developments in Beijing over the next couple of days, with China's top leaders have now promised more forceful economic stimulus next year, but we still want to know more about the details, right? And that goes down to the Central Economic Work Conference that's running over the next couple of days in Beijing. Let's bring our Chief North Asia correspondent, Stephen Engel, in Hong Kong. It's interesting, Steve, if you take a look at kind of international investor expectation, it seems pretty muted. Can we expect the details to be fleshed out by the end of the day tomorrow?
Well, it's possible, but not likely. This is a closed-door two-day meeting, likely a two-day meeting of mostly provincial leaders, not the top level of government with Xi Jinping. They had that 24-member Politburo meeting on Monday. This is now lesser officials, if you will, who have to basically put together the plan, put the meat on the bone of the promises made by the Politburo. And there was a long list of promises. Okay, they set the tone for sure. Whether it's going to be a moderately loose monetary policy. The question there is how far do they have room to cut rates? Most economists I've spoken to say yes, there's much more room for a looser monetary policy. They talked about more proactive fiscal stimulus or the tools. Well, we don't have any details. And what will be the priorities? Which sectors will be prioritized with fiscal stimulus? Last year, or this year, I should say, was the new three, if you will, EVs, solar, and, of course, batteries. But that's run afoul with trading partners who've claimed overcapacity and that perhaps there's some dumping of these new technologies, or EVs and the like. So will they more shift to a pro-consumption fiscal stimulus? Because they've talked about forcefully lifting consumption. But the question is, how are they going to do that short of cash handouts? Look, Xi Jinping, you see here, he's not a he's not an advocate of welfarism. He's not going to be giving out cash to households. So how are you going to stimulate confidence, which is sort of rock bottom right now? And again, there could be the possibility of lifting, because they've talked lifting the fiscal deficit to as high as 4% of GDP. That would be the highest they've done since 1994. So that would be an extraordinary move. But again, we've had promises and we've not really had details yet. And that's what we're waiting for as they do sit behind closed doors in Beijing for a couple of days.
Yeah, is that why the market rally following the Politburo statement didn't necessarily last that long?
It didn't last long at all. I mean, it came out of the gate sharply yesterday. Stocks in Hong Kong were up 3%, both the Hang Seng Index and the HSCEI, the 8-share index. Stocks in Shanghai and the CSI 300 in Shenzhen rose about 3%. And it all petered out by the end of the trading day yesterday because, again, they want some details. Sure, there was some profit-taking going on. Sure, there's a lot of focus on inflation data coming out of the United States, so maybe investors taking a pause. But the rally on the sentiment, the tone set by the Politburo, didn't last long. As you can see, Hong Kong ended up down for the day, both the HSCI and the HSI. That was the big pop-up. You can see the big dragon's tooth upwards and then the fall off afterwards. So we'll have to see, again, the details that if they come out following tomorrow's conclusion of the Economic Work Conference. But we might have to wait, actually, until March, because the Economic Work Conference sets the agenda for the National People's Congress, which begins in the first week of March.
Our Chief North Asia correspondent Stephen Angle there with us. We'll have a lot more when it comes to China's annual economic meeting, the stimulus signals, what details we could get. In the next few minutes, we'll be speaking with Credit Agricole for their take. Shery.
And Haidi, we're watching Nippon Steel at the moment under a little bit of pressure, down 0.5%, but really not as much as we saw US Steel plunging in the overnight session. This, as we heard from sources, President Biden plans to formally block the $14 billion sale of US Steel to Nippon Steel on national security grounds. The deal will be referred to the president later this month. It's been reviewed by the Committee on Foreign Investments in the United States, or CFIUS, and it's not clear what that review will say, but it's suspected that at least one member of the panel sees the deal posing a risk.
Shery, take a look at how we're kind of viewing European equity futures just coming online now. A little bit of downside there, and perhaps unsurprising. There's, of course, a risk aversion ahead of key US CPI numbers, but it does really follow the decline that we saw in the Tuesday session. An 8-day winning streak for European equities came to an end there, as did kind of the optimism over China's stimulus sort of faded there, right? Luxury goods makers, industrials, some of the telecoms names that had led those, the rally had then led the decline as well. We also have the ECB's meeting on Thursday as well. That will be kind of a key test for that year-end rally. Watching France as well, Goldman Sachs saying that French stocks having the worst year since 2010, still not attractive yet. This is Bloomberg. Take a look at the decidedly underwhelming performance that we saw in the Golden Dragon Index. Sales down 4% overnight. As really, we kind of have investors wanting to take that wait and see approach. Of course, the incoming US CPI number, the myriad central bank decisions aren't helping, but a lot of this is really wanting to see concrete details in China's stimulus plan and the consumption plan before really going all in on this time around the China recovery rally. Well, that Central Economic Work Conference is due to begin today. It's a 2-day event that sets the economic agenda for China in 2025 and comes on the back of the top leadership's promises of greater economic support. Beijing is, of course, bracing for a trade war when Donald Trump takes back the office and the White House. So let's get more from Xiaojia, who's the chief China economist at Credit Agricole. So we did hear, everything that the market wanted to hear in terms of messaging from the Politburo, from the sort of consideration of where monetary policy will be, the intent to support domestic consumption. What details would you expect from the Economic Work Conference over the next 2 days?
Right. After the very positive top-down signals from the Politburo meeting. Certainly, Central Economic Work Conference will be the venue for us to hear a little bit more. I think it's very important that after this top-down pledges of unconventional counter-cyclical policy adjustments, what could be coming out. I think it's also very important just after this more proactive fiscal policy and this adequately loose monetary policies, is also important to know that for the first time, actually, if we compare to last year, China has put down to greatly expand domestic demand and consumption first in front of the industrial policies and the technology and the innovation. So this would show that while fiscal expansion is everybody has been expecting, China could first finally put down some more of the demand side of stimulus on top of those supply side. I think we probably will see more of the details coming from that front as well. So if you look at the consumption, there will be some of the measures that could be encouraging to markets at this moment. For example, if China could announce something that to expand the household incomes, for example, to expand those subsidies to those relatively low-income households, to support those employment of those youth and also migrant workers, and also to expand those consumption stimulus. Just beyond those auto and also to some other areas, for example, beyond home appliances, to broaden, for example, to mobile phones, also to raise those these consumption vouchers, for example, to encourage people to take more of the service consumption during the holidays. Those could be possible policy details that could be discussed as well.
What about just direct payments to households? Because a lot of economists have said that's what you need to do, and there's been a lack of willingness to do that.
Right. Yeah, I think there could be some details detailing about whether they could to increase the social benefits. That is also a key part how China could really improve the social benefits and also to maintain the social stability that has been highlighted during the Politburo meeting. That is an important part of that.
What would that actually mean for the growth target that we'll see later from Beijing?
Yeah, if we look at this year's growth breakdown, the drivers, right, has been really have received a heavy support from the external demand. While we see that export growth lately has shown some signs of moderation compared to before, but still very, very resilient. But then coming from 2025, in the face of likely more challenging external demand, when the US Trump administration will certainly hike tariff rates quite aggressively on China, that would really have to have the policymakers to really look at their policy options to expand the domestic demand, and especially consumption would be an important part of that. If we look at this year and the growth drivers, household consumptions, their contribution to GDP actually have softened compared to previous years, especially before the COVID time.
Xiaojia, in your calculations, how big of a hit could tariffs coming from President Trump be in 2025? I know that we don't necessarily have a number right now of what sort of tariffs we could see, but what's the worst and best case scenario at this point?
Right. In terms of the tariff hikes likely from the U.S. Trump administration, we think after Trump comes in, the tariff hikes on China will likely come through rather quickly. We think the first round of the tariff hikes on Chinese goods could arrive as early as the second quarter of 2025, and also gradually hiked to be average 40% on the overall Chinese goods. This will be a very significant significant compared to what we have seen, less than 20% of the tariffs on the overall Chinese goods. So that of the growth hit will become increasingly more visible starting from the second half of next year. And we think that the growth impact could be about 0.5% percentage point for overall next year, and to be even hiked to 1% for 2026. That is certainly something that the Chinese government will really have to look at their measures, how they are going to offset those negative shocks. While this top-down policy rhetoric from Politburo meeting has been very encouraging, and the market clearly want to take more clues in the upcoming Central Economic Work Conference, as well as from the National People's Congress next March. But of course, as you have mentioned, there have been a lot of uncertainties. So if the tariff hikes from the U.S. becomes more significant than, for example, the average 40% to even 60%, then I think this is going to be very significant. That could be more significant to this 1 percentage point that we are talking about in 2026. And also, this would have a negative impact on the not just China, for the rest of the world. So external demand is something that the policymakers will closely follow up, and potentially China would have more of the positive policy response in terms of how they are going to stimulate the domestic economy.
Xiaojia, good to have you with us, Chief China Economist. Credit Agricole trying to break down what sort of policy measures we could get from Beijing. But perhaps it's a lack of details and a promise fatigue, while China's sway over the global markets seems to be in noticeable decline. Asia Equities reporter Winnie Su joins us now with the latest. Winnie, so the reaction around the world was pretty muted, even as we got this huge signal coming from China's Politburo.
Yeah, exactly. It seems like both China and the rest of the world are not really impressed by the stimulus so far. As we saw, MSCI Asia was pretty flat yesterday. And when it comes to metals, gold, and even oil, we saw pretty muted movements. And even for China stocks, while we saw they opened higher, actually most of the gains faded towards end of the day. So, traders are saying that this really is, like you mentioned, Shery, the lack of concrete policies coming through so far. And until we see more details what exactly the support will come from the government, investors seem to be quite reluctant to put more money onto the table. And especially when you also think about the timing, it's also towards the year end. So we are expecting less new money to come into the market unless we see stronger reasons of doing so. And now that seems to be lacking as well. And not to mention, we still see China's issues to continue, whether it be the economic issues and also property and the weak consumption. So it seems like the stimulus that have been announced so far are not as strong as investors would expect to lift the country outside of the deflationary environment so far.
We have seen a steady decorrelation in terms of China and emerging market assets, right? Does this have implications for Asia EM going into next year?
Right. So actually, we have seen 5 consecutive months of outflows from Asia EM markets until end of November so far. So the setup for Asia EM emerging markets for 2025 is actually looking quite tough at this moment, especially with this big risk around Trump's presidency and the US tariffs coming in. So with that inflationary environment in the US, we're likely to see the US dollars remain quite strong and hence potentially a shallower rate cut from the Fed. And that would actually trickle down into Asia. So we're going to expect an even slower or a delay in Asia's central banks cutting its rates, and that would potentially continue to affect Asia's economy and the stock market. So we heard that from UBS just last week, saying that Asia/EM market is actually going to be the most affected among its global peers entering next year, and that's what also BlackRock agreed, saying that the U.S. is likely to beat all its peers next year as well, considering kind of how much they can benefit from the AI trend and benefit from Trump's presidency for the domestic market as well. So while we have that emerging markets facing the struggle from kind of the macro environment in the U.S., actually, if we can see some bright side from China's stimulus, that can potentially be one thing that can benefit the Asia-EM markets. So we've got traders saying that if we see stimulus really coming in to support China's market, higher commodity prices in China can benefit countries like Indonesia, and the travel demand, if we see is going to increase in China, that's going to kind of benefit markets like Thailand as well.
Our Asia equities reporter Winnie Su there. Let's take a look at how Asia markets are tracking as we have a great deal of uncertainty, central bank decisions, US inflation data, these expectations of potentially more details out of Beijing policymakers. All of this is weighing across the board. In particular, we're seeing some downside when it comes to trading in Australian stocks. Banks as well as some of the miners are dragging. They're really following the incremental moves that we saw in the US session overnight. The Nikkei 225 also a little bit softer. Interestingly, some gains we see across the Kospi of about 0.7%. And certainly, if you take a look at some of the sectors in South Korea, from utilities to retailers to energy, some of the cheapest sectors across the Asia Pacific at the moment, if you take a look at forward PE ratios, and that sort of calls into the question how much the Korean discount has really deepened over the last few weeks and whether we could see that recovery if perhaps some more of that political certainty comes to pass. But coming up on the Asia trade, we'll be hearing from one of South Korea's unions pressuring President Yoon to resign. We'll be speaking live with the striking metal workers union next. This is Bloomberg.
Take a look at how some Korean manufacturers are trading today. Early in the Korea session, we are seeing Kia sustaining some gains despite the fact that we've heard that metal workers at the company will be joining a strike today, protesting and pressuring President Yoon to resign. This means that workers at all three Kia plants in the country and at the automaker suppliers will strike for 4 hours. They're also demanding better working conditions and higher wages. Of course, what we'll be watching very closely is how this unfolds and if we continue to see more pressure when it comes to other unions also joining this effort. Joining us now is Haewon Chung, International Executive Director at the Korea Metal Workers Union, which has around 190,000 members. Haewon, it's really good to have you with us. I know that you're busy with, of course, the strike today. Tell us a little bit about why you're doing this now.
The reason for the strike is in response to what the union calls a political coup d'etat by the Yoon and the pro-Yoon forces. Also, the ruling party blocked the impeachment motion that was going through Parliament last Saturday. So workers feel that, in order to step up and preserve democracy, in order to defend workers' social and economic status, that we need to take action.
But why are you going to take action instead of, say, other workers and other associations around the world?
Well, metal workers, the identity of metal workers in Korea is strongly intertwined with the building of democracy in the 1980s. So we had a long series of military dictatorships. And in the 1980s, there was the June struggle and the strikes from July, August, and September that eventually closed the military rule and opened and ushered in the era of democracy. So many sacrifices were made by workers in order to usher in the Sixth Republic, the Democratic Republic. So it takes a long time to build democracy, but in the blink of an eye, people who are not paying attention can find themselves under military rule again. Seeing how fragile democracy is, we are asking our members to step up to defend democracy and also to defend workers' rights. We should add, Yoon has also, among the 25 bills that were passed by Parliament that he vetoed, one was a bill called the Yellow Envelope Bill, and that was to guarantee subcontracted workers' rights. It was a bill that was put in Parliament by petition of the people after a big strike in the shipbuilding sector.
What happens if Yoon is not removed? Because right now the proceedings around the president seem very murky at best.
Yeah, so this is the second reason why we're going on strike. So what has happened is that Yoon has sort of anointed his successor to be a party, his party, and the prime minister, who was one of the cabinet members supposedly present in the decision to impose military rule. So basically, the coup collaborators are now running, or this is what he wants, to have the coup collaborators run the government, while simultaneously he still seems to be holding on to the reins of power and appointing new people to office. So this is a reason why it's very important. Democracy rests, the fundamental premise of democracy is that the power of the government derives from the people. And so by workers stepping up and showing, we do not accept this arrangement, step down now. We do not accept someone who is, traded our democratic rule for military rule to continue to be the commander-in-chief of the armed forces. So I think either the impeachment motion on the 14th will pass, or Yoon will have to be stepped down in response to the candlelight vigil protests and the protests of workers and people.
Really has been, as you said, a bloody and very difficult path to democracy here in South Korea. But at the same time, workers' livelihoods depend on a good economy. How do you really resolve that dichotomy where if you go on strike, you might hurt some of these big companies that are also the engines of economic prosperity here in the country?
Yes, this is true. And in the 80s as well, it was even more true because we organized in auto, shipbuilding, steel, semiconductor. So the main engines of Korea's manufacturing and export economy are unionized in our union. So in the 80s as well, so you're right. What workers do support a strong and prosperous economy. However, when someone has shaken the bedrock of democracy and is continuing rule through some unconstitutional and unlawful arrangement, it becomes more important to question what our values are. And we believe that the economy will eventually be better under democracy than under the continued threat that another martial law could be called. So in order to bring this economic crisis to a close, not the economic crisis, in order to bring this democracy crisis to a close, workers are also taking a sacrifice, a wage hit by going on strike. And I think also, 4 hours less of cars made, today is not going to kill any of the companies. But losing democracy, losing rule of law, these impact everyone.
You want to send that message with that strike today. Do you expect other unions and more workers to go on strike as well?
Definitely, the whole trade union movement is looking at the motion in Parliament for impeachment, as well as the investigation. As you know, our government is now occupied by all these people who are under investigation for serious criminal acts and also for against the Constitution. So we'll be watching those advancements to increase the intensity of the actions.
Won-Jung, thank you very much for joining us today on a very busy day. International Executive Director of the Korea Metal Workers Union. We also continue to seek interviews with the ruling party as well as President Yoon. Do watch us live and see our past interviews on our interactive TV function, TV Go. There you can also dive into any of the securities or Bloomberg functions that we talk about and become part of the conversation by sending us instant messages during our shows. This is for Bloomberg subscribers only. Check it out at TV Go. This is Bloomberg.
We do have some breaking news crossing the Bloomberg with the US mulling harsher oil sanctions on Russia ahead of the incoming Trump administration. We are hearing that the Biden administration is considering new sanctions on Russia's oil trade to tighten the squeeze on the Kremlin's war machine. These potential measures could target oil exports, of course, including singling out foreign buyers of Russian crude, as well as restricting the tanker fleet that Russia uses to transport its oil. And the overall goal is to try and increase that pressure on Russia before President-elect Trump takes office and to give Ukraine a little bit more leverage in potential negotiations to end the war. So these details that we know of are being still worked out, but President Biden's team is considering restrictions that could target some Russian oil exports, according to people familiar with the matter. So this has been really, Shery, a step that has been resisted by President Biden for a long time over concerns that could trigger a spike in energy costs, particularly in the lead up to last month's election. But we are seeing, of course, pretty muted picture when it comes to prices at the moment.
And that spike in energy prices, of course, could lead to a spike also in inflation. And inflation is such an important part of where the Fed goes from here. We are expecting the US CPI numbers, of course, later today. And you can see US futures really muted at the moment as people, not surprisingly perhaps, are sitting on the sidelines waiting for that US CPI November numbers. And take a look at how A50 China futures ended the session, also pretty muted, despite the fact that we got that very strong Politburo signal of a shift when it comes to support of the Chinese economy. Extraordinary counter-cyclical policy adjustments are now expected, as we, of course, also have the Central Economic Work Conference that will craft the priorities for the following year, such as the annual growth goals. So we'll be watching those developments as well. That's it from the Asia trade. Our markets coverage continues as we look ahead to the start of trade in Hong Kong, Shanghai, and Shenzhen. The China show is next. This is Bloomberg.